Welcome to Factful Finance, where we turn complex financial questions into easy-to-understand solutions. Let me ask you a question. Did you know that nearly 30% of Americans carry a credit card balance month after month, and the average interest rate on those balances? Over 20%. If you're in the same boat, don't worry. Today, we're diving into the best practices for using a credit card responsibly, and I'll show you how to avoid falling into that trap. Before we begin, a quick disclaimer. The information we share here is for educational purposes only. For personalized advice, it's always best to consult with a financial professional. Now let's get into it. Using a credit card responsibly isn't just about making payments on time, it's about managing your financial health long term. First, let's talk about paying your bill on time. It might sound simple, but late payments can have a huge impact on your credit score and cost you hefty interest charges. In fact, late fees can range from $25 to $40 per missed payment, plus the damage to your credit score can make it harder to secure loans or better credit terms in the future. To avoid this, set up automatic payments or reminders so you never miss a due date. Next, pay more than the minimum balance. While it's tempting to just pay the minimum required, this can trap you in a cycle of debt that's difficult to escape. For example, let's say you have a $1,000 balance with a 20% interest rate. If you only make the minimum payment, it could take you over 5 years to pay it off and cost you hundreds in interest. On the other hand, paying more than the minimum, even if it's just a little extra, can significantly reduce your debt faster and save you money. Another key best practice is keeping your credit utilization low. This means aiming to use less than 30% of your available credit. For example, if your limit is $5,000, try not to carry a balance higher than $1,500. Using a high percentage of your available credit can negatively affect your credit score. It also signals to creditors that you may be overextending yourself, which could lead to higher interest rates and more challenges in securing loans. Know your rewards program. If you're using a rewards credit card, make sure you understand how the points or cashback work. Are there restrictions on certain purchases or specific categories that offer higher rewards? For instance, some cards offer bonus points for dining or groceries. By strategically using your card for the right purchases, you can maximize rewards without overspending. Another critical step is to review your statements regularly. It's easy to forget about small charges, but these can add up quickly. By reviewing your statements monthly, you can catch errors, spot fraudulent transactions, and ensure that you're only paying for what you actually purchased. Finally, avoid opening too many credit accounts at once. Each time you apply for a new card, a hard inquiry is made on your credit report, which can slightly lower your score. It might seem like a good idea to open several cards for rewards or lower interest rates, but this could hurt your credit in the long term. Space out your credit applications and only apply when necessary. To wrap things up, let's look at a quick example. Sarah, a recent college graduate, started using her credit card responsibly. She paid off her balance every month, kept her utilization low, and reviewed her statements regularly. A year later, her credit score had increased by 50 points, and she was able to secure a loan for a new car at a much lower interest rate than she would have if she had mismanaged her card. What's your strategy for using your credit cards wisely? Share it in the comments below. I'd love to hear from you. Thanks for tuning in to Factful Finance. If you found this video helpful, don't forget to like, subscribe, and hit the bell icon so you never miss an update. Until next time, keep managing your finances wisely.